Hi, I'm David Malkins of the Bowery Alliance of Neighbors. And on behalf of the Bowery Alliance of Neighbors, I welcome you to this workshop, which is going to explain how eligible commercial and residential property owners in the Bowery Historic District can get tax credits for renovation work. We would first like to thank the New York State Historic Preservation Office, the Preservation League of New York, and the New York Landmarks Conservancy for partnering on this webinar. Special thanks to the Preservation League of New York State for creating the promotional material and handling the event's technical aspects. The Bowery Historic District was named to the State and National Register of Historic Places in 2013. The Bowery Alliance of Neighbors and Two Bridges Neighborhood Council sponsored the designations, but the building by building research and writing that made it possible was the work of architectural historian Carrie Culhane, who also authored the Chinatown and Little Italy Historic Districts. Please welcome Carrie Culhane.
Thank you, David. I'm Carrie Culhane, and I'm an architectural historian and the author of the National Register nomination for the Bowery. So thank you, David, for that intro. And thank you who are participating in this for your interest in this topic and for your stewardship of New York's historic resources. The Bowery is New York's most architecturally diverse streetscape, and unlike many historic districts that have a similar look and feel because they were built around the same time, the Bowery is unique because it's representative of 4 centuries of New York history. And these buildings are valuable resources, not just as real estate investments, certainly they are, but as investments in our shared history. And historic buildings are truly irreplaceable. And as a consultant on tax credit rehabilitation projects, I see firsthand the tremendous payback on investment in these buildings. As a historian, I've helped list thousands of buildings in the National Register. And if each property owner were to take advantage of the credits available to them, they would collectively realize hundreds of billions of dollars in tax credits. So I hope that some of those billions make it into your pockets. And with that, I will turn it over to those who can tell you how to do it. So thank you.
Thank you, Carrie.
Great, thank you, Carrie. Hold on 1 minute here. Hi, so I'm Christina Hingle. I'm with the Preservation League of New York State. I'm the Preservation Policy Manager. First and foremost, I really wanted to thank David Malkins and the Bowery Alliance for inviting the Preservation League to be part of this program. We're very supportive, obviously, of preservation all across the state and are eager to be involved with these local webinars so that we can really, see the concerns of all these local regions and hear a little bit about some of the things that everyone's dealing with in terms of historic tax credits, especially. Some other things that we do at the Preservation League, we do advocacy, outreach, and provide technical assistance, whether that be an individual that calls us or a municipality looking for preservation or historic guidance. We're here to answer those questions. What I mainly focus on is public policy. So that's going to be the legislation that we're seeing at the federal, state, and local levels for historic preservation and advocating for improvements to programs such as the state historic tax credit. So obviously that's one really important part of our work is helping get the word out and helping people realize what an amazing asset our New York State historic tax credit programs are. We also rely heavily on our colleagues that have regional nonprofits across the state to be the boots on the ground and let us know what's important to them and what they're seeing in preservation and how we might be able to assist them. One of the things we do annually is our Excellence Awards programs. Stay tuned in November for our announcement of our 2020 winners. As normal, we've had a great selection of projects and preservation initiatives from across the state, from Long Island to New York City, to Central and Western New York and everywhere in between. So that's one way we really like to highlight some of the great things we are seeing in preservation. And then by that same token, we have a 7 to Save program, which is a biennial list of threatened resources. So not only do we highlight the great things happening in preservation, we also want to call attention to those things that we really need to protect before it's too late. And then lastly, our grants programs are a partnership with the New York State Council on the Arts through our Preserve New York grant program and our technical assistance grant program. We're able to get some money into the hands of preservation projects for the writing of various reports that help engage us in historic preservation projects. And we also have an EPIP loan program that provides assistance to projects that might otherwise not have assistance as well. So that's some of the things we keep busy with day to day. Here's just some information on how to reach us at the League and how to reach me. I think I added the agenda for tonight as well as the contact email for all of our speakers. So if you want to take a look at that, make sure you have everyone's contact info if you have questions. What we'd like to do at the end of the presentation is do a Q&A session. So as we're presenting, if you'd like to type your question into the Q&A box, the speakers will then be able to read through that at the end, and we'll try to answer as many questions as possible. We're also recording this webinar, and if you missed something or want to go back, it'll be on the League's YouTube channel in the next few days or so. So with that, I will turn it over to Daniel McEnany from the State Historic Preservation Office, and he's going to give us the great overview about the Homeowner Historic Tax Credit Program.
One second, folks. I'm just switching over here to my presentation. Okay. Well, thank you, David, for having us and my colleagues at the League and the Conservancy. We've worked together for years, and I had the pleasure of working with Carrie on the nomination. She was the chief author, and I got to be the bureaucrat who helped file the documents with the National Park Service. So it was an exciting project, such diversity on the Bowery in particular. And we're really pleased to talk to you today about the homeowner program. I want to remind people that we have two tax credit programs, one for commercial properties and one for homeowner properties. So today we're going to focus on the homeowner program. I want to remind you that on the 17th at the same time, we'll be focusing on the commercial program. I'm with New York State Parks, which I hope everybody's familiar with. We have state parks from Niagara Falls to Long Island, and our newest park, which opened up in Brooklyn, Shirley Chisholm State Park. If you have not been yet, I strongly encourage you to go. It's called the State Historic Preservation. We're tasked with carrying out the federal and state laws associated with historic preservation. So we are not New York City LPC. We are different. We are on a state and federal level. To give you a little information about the homeowner credit, it's a 20% tax credit. Now, credit is a dollar for dollar reduction in what you owe to New York State. The credit converts into a refund when the applicant earns under $60,000 a year. Now, these are some basics to keep in mind because this is going to come up again when we talk about condominium projects. You have to spend at least $5,000 to get a homeowner tax credit. And 5% of that work has to be on the exterior of the building. There's a limit on the amount of credits you can take per year, which is $50,000 or a $250,000 project. Largely honorific. It's more of an incentive-based program. So the Bowery itself is on the register, but it is not LPC in census tract. So here we've got a map of Bowery. You can see it goes all the way from the plaza up to Cooper Union. And you'll see the green shows the eligible area where you can claim the credit. This is also going to apply when they talk about the commercial credit tomorrow on Thursday's presentation. So there's really just a small chunk there that overlaps with the NoHo Historic District. but mostly the majority of buildings are all eligible. I'm going to reference the application quite a bit through this. The application, we say, is in 3 parts. There's the part 1 application, which just confirms basic information from you and the building, confirming that it's listed and contributing on the register. Part 2 is the description of work, which means that's the work that you propose. And part 3 is what you're going to submit to us after all the work is completed with all of the final costs. So some more basics with the project. You need to be pre-approved for this program. If work has already been completed within the past tax year, you can give a call to our staff and we'll have a conversation about it and see how far along you are, if things are still in motion. So, but generally we want to see the work before you've completed it. There are fees. It's a $25 fee to apply for the part 2, and there's a sliding scale fee for when you complete the project. Note that you can take this application every year. So you could do a $250,000 project each tax year, and you could keep applying for it. You also could start a project in 2020 and complete that project in 2024. So you can keep an application for a long time and you can keep adding projects to it as you go along. Typical work that qualifies, quite a bit is going to qualify for this. Structural systems, roofs, exterior wall, masonry, stoop replacement, the interior also. A lot of people assume that historic preservation generally only looks at the exterior through the building permit process. The credits are also eligible for your interior projects, and that can be things as simple as heating and electrical and those things. Very popular item right now in the 5 boroughs is installing solar. For those of you in an LPC district who'd be familiar that they have requirements on the visibility of solar panels, and we do the same thing. But in general, historic preservation we view as a very sustainable practice in itself, and we're very encouraged for all sorts of different alternatives to reduce our load on the grid. Work that doesn't quota, because I thought it was a pretty decent example for some things in New York City that tend to be outside of local districts, but we also would not approve something like a large addition. We don't approve site work. It's things outside of the building footprint. And our work has to follow what's called the Secretary of the Interior Standards, which is the National Park Service gives very broad guidelines for the treatment of historic buildings. I'm going to just sort of take those down a little bit and just cover some of the general ideas and concepts behind those standards. And that is what we call the 3 R's: to retain, repair, and replace. So what do we mean by retain? Well, retain is if there's already historic features there, we're going to want you to keep those. There's great value in the existing material. There isn't really a reason to remove something if it's already adding character to the property. We also say in interiors, we like to retain aspects of floor plans can be really significant. Not all aspects of the floor plan, but there are general ideas that we're not really into the idea of wholesale demolishing an entire floor plan. Intact plaster and these things are pretty important to us. And those are requirements under the program. So we're going to review your work looking at those things. What does it mean to be repaired? Well, repair is really simple, is that the historic feature itself doesn't require replacement by any means, but it requires a very specific kind of repair. Anybody who's dealt with masonry, for example, I always say there's a fair amount of chemistry involved. If anybody's hired a poor mason who's done actual damage to a property, those are some of the guidelines we give you under repair. Replace, and some of these photos that I give an example of, in the upper left-hand corner, you can see which is a really cruddy flat roof that probably anybody in the Bowery's seen. All of the crackling, and replacing it for this is really simple. You say to us, this is what my roof looks like. It's in really rough shape. And we're just going to do another tarred roof. And that's an easy one to approve. Something like windows, for example. Windows, we would want to see that they were what we call deteriorated beyond repair, meaning there's no way for you to salvage them. And what we would ask for is that you were looking for a window that would be complementary to the history of the building and have the same shadow lines, for example, that they fit the openings in the same way. So that's basically kind of the three concepts that guide our work. I like to talk about the difference between rehab and restoration in this program. We restore museums, or a house museum, for example. We rehab buildings. So for example, I use this sort of, what someone could think is kind of a generic new kitchen, nice. And this was in a house that had absolutely no historic kitchen to reference. Kitchens and bathrooms, we rarely see them as being historic when they come into the program. So rehab really means is making a proposal that you need to have a 21st century house. You need a kitchen. You could go on the modern end. You could go with something that references history. But there is a difference between rehab and restoration in the way that we look at approaching your projects. This is going to be a little dense, and I thought a lot about this today when I was preparing the presentation about what's actually on Bowery, because we've got a lot of different types of buildings, and a lot of the photos in here you're going to see are just very typical row houses and brownstones in New York City. So I don't know that there is a ton of buildings where it's one owner with one income producing component to the house, but you can apply for the credits and you can have one or more rentals in here. Now, I loathe to give you something very, very text heavy, but this is going to happen probably in my next two scenarios here. So if you've got a rental, basically the way that New York State looks at it is that you're earning income from a component of your house, but you're additionally a homeowner. So the first thing we'd ask you to do is determine what's the rough percentage of what you rent out in the building. I ask people to use kind of even numbers. People love to say like it's 46%, just really something 50-50, 75-25, identify that. What you can use is you can use a portion of the credit value on all of the exterior, all of the common spaces. Those can be, hallways, basements, attic spaces, stuff like that. So basically what this is saying here is that we would do a calculation based on the fact that you earn some income there. I think the easiest way for me to say, if you have this type of property, call our staff. We're here to work with you. We're here to get you through the application. And we let people know how that's going to work out and how ultimately your credit is going to shake out towards the end, or the part 3 of the project. What I did want to spend a little bit more time on was co-ops and condominiums, which for homeowners in Bowery and do some co-op owners in the past. So I want to walk you through a little bit how a typical co-op or condo would come into this project. Co-ops and condos are generally, capital improvements are paid for by a homeowners association fee, your monthly dues, if you will. And generally your building is governed by a board. And that board will, work together to figure out what are the large kind of capital improvements that need to happen to the building. They don't make improvements to the interior of your unit, but they focus on sort of, larger aspects of what has to happen for the program. So going back to one of the basic requirements in the beginning is that one homeowner, one taxpayer of New York needs to spend $5,000 and 5% needs to be on the exterior. Now, a lot of homeowners don't have control over their over the exterior of the building. So how does a co-op building get in here and get some credits for the individual owners? Well, generally that comes in with a kind of larger capital improvement project. And so I give some examples of, the roofs, the solar, mechanicals, elevators, stuff like that is what I generally see come in. What's not available is a lot of times a co-op or a condominium can own a commercial space. Maybe they rent out a space as residential, or they have the entire first floor store is rented out. Those things would not count, but they would count in terms of the number of units that are in the building. So that'll play into what I'm calling scenario 2. Really easy. And this scenario 1 is if you're a homeowner who does have control over an aspect of your building, and this happens quite a bit, I see some people I think it's unusual, but one owner will say, I'm just paying to replace my windows, and the association said I could do it. that'll cover your 5%. That's really easy. You just come in as an owner directly with one application into us. But scenario 2, which is also very text heavy, and I apologize, but I'm glad this is being recorded so you can go back and look at it. This is what we're generally going to see. And I use some really simple math here. I call it my liberal arts math. And I did kind of a smaller building here. I did about like 5 units. I know there are ones that can be up to 30 to 50 units in a building. So I'm using some really basic math here. So in this scenario, you've got 5 owners coming in and they're planning a large capital investment. Minimum that 5,000 means it's going to produce $1,000 credit. So this group of 5 needs to spend at least $25,000 to get each owner a $1,000 credit. When the association is applying for the program, the units, you take them and multiply them by 5. So basically 5 units times 5 is 25, 10 units is 50,000, 30 units would be 150,000. That gets your foot in the door for the program. Once that part 2 is approved for the large capital project that the association is planning, individual owners could then submit additional individual applications to increase the amount of their credit. So they could do their kitchens, they could do painting, they could do refinishing, and all of that is in the goal that you would get a credit, 1 from the association through New York State, and then 1 through, you could increase it through filing, filing a separate application. As I said before, if there's a commercial unit, that counts towards the entire unit total. So here's a breakdown, and this is sort of the story of how this building came together. So they have to spend the $25,000, has to be 5%. So they spent $100,000 and they did a new roof and they did masonry repointing. We approved the project. 20% of that credit of a $100,000 project is $20,000. You amortize that over 5 units. That's $4,000 credit per owner. One of the unit owners has decided to install a new kitchen and refinish the floors at a cost of $50,000. They got an extra anticipated with $14,000 investment. So that's getting what you pay in HOAs and what you pay out of pocket. Only unit owner is allowed to claim the credit. An association doesn't pay taxes in the same way to New York State. So you could have a building of 10 people and the association could offer to spread this credit out among them. If an owner chooses not to file, it's an incentive, that's their choice. So they would just not file. It doesn't mean that you could take the credit that doesn't appear to be used by someone else and spread it out. I always think these things are best operated by working with an accountant or your savviest Excel spreadsheet member of your board. But these are really common. We do quite a bit of them. It seems very daunting. And again, this is really where our staff is here to help you. We will go through this, and I spend a lot of time talking to people and walking them through this process. So here's the application. 1, 2, and 3. That's how we're gonna run it. We're gonna submit the part 1 and 2 together. Very basic information. It has a $25 fee. Some tips here is I would say check with a local preservation organization. Sometimes they maintain contractor lists. It's a little tough in the 5 boroughs, but it's a little bit better upstate. But local preservation organizations they are your friends, they're here to help. They additionally might have some tools. They might operate programs like the Conservancy we'll talk about shortly. So I would always say reference back to them. We're all community as building stewards. Be prepared to supply photos. Because we don't come to the site, a lot of what we do is visual. So be prepared to kind of walk us through the project. It's a really simple kind of grid proposing this is the work we're doing, and this is a very, very basic kind of breakdown of they're doing a roof. What's the current condition? Match that up with a photo. Well, it's worn out, it's leaky, it's no good. What am I proposing? So send me and tell me what you're planning to do a brand new roof. Loose mortar, and when you look at mortar here, this is kind of a very on the spot proposal that I'd love to see, where someone's telling me that they're going to match the color, the texture, and the tooling and stuff like that. If you're unsure about how to phrase that sort of thing, or your contractor can't work with you, we'll help you fill it out. These are things that have to come with it. As I said, photographs, Really super important, front and back. I'll tell you this, I get a lot of things like I can't access the roof. A flat roof is a flat roof. I generally don't need to see it. A lot of people will send me pictures of like, this is the boiler. I really don't need to see the boiler, but thank you for the photo. So we want to get a lot of before photos there to give us an idea. A floor plan is not required, but it's helpful. Some people are working with architects and contractors who have already prepared things. That's great, send it in to us. If it's a smaller building, you can just sketch it out if you want. It's not required, but it's helpful for us to kind of visualize going through the building with the photos. If you're proposing replacement, things like the windows or the doors, generally there'll be some kind of manufacturer's cut sheet or a shop drawing. Supply those so we can really take a look at that. Our staff is made up of a lot of building conservators. A lot of them went to school with people on this call, like Blair, and they know what they're looking for when they want to see the appropriate type of window. Okay, so you've gotten approval from us. We've seen your scope of work. We think that's great. Some things to keep in mind. There will occasionally be a kind of special condition that we put on it, and that's usually a tip to you and your contractor about a particular treatment. We just want you to be especially mindful of something. Say it's something about the staircase, and say it's something about the mortar. You'll see a note in there. If for any reason your project substantially changes as you're working on the project, things tend to come up. You have to take down a wall, something's revealed, there's an additional cost in here. You just submit an amendment sheet. I can take those over email. We just give you a really quick approval on there. We don't ask you for receipts at all because this is a tax credit program. Really, ultimately, your relationship ends with New York State Tax and Finance. We don't need to see the exact cost of everything. It is a good faith program that you are reporting these numbers accurately. We recommend you save all of your receipts, invoices, everything to the project in one location, including these approvals. If you ever feel uneasy about the project, things might change, call us. We're here, we handle a lot of projects, but we're enthusiasts for what we do, so we like talking to people. Part 3, everything's done. You did everything that you said you were gonna do in part 2. You're gonna basically go through that photo process again and show us what you did, and show us that it was the things that you discussed with us. The cost may change. A lot of times you don't have to get a contractor's estimate beforehand. If you roughly have an idea that it's going to be $25,000 or $100,000 for a particular treatment or something, you can put that. But ultimately, if it comes out to be more or less, you'll know because you'll have the receipt on hand, so you report those things. Final letter comes from us. You say you're approved. We call that a certificate of completion. And we direct you to the New York State Tax and Finance form for you to fill out, which you can do yourself or with an accountant. This is a house that you would never see on Bowery, but it's a really fun example. So I use this is actually in Syracuse, New York, so there'll be a little before and after. The leading causes of denial through this program, doing work that doesn't meet the standards, doing something that harms the building architecturally, obviously it's going to be a bit of an issue because really the purpose of this program and legislation behind it is to support people in the cost of rehabbing historic homes. So that would cause a denial. Applying for projects that are already completed. There's a lot of times I'll just get like a part 3 and everything's done. No, that's not good. Like I said, give a call if you have some things in progress. Not having photo documentation prior to demolition. For like one of the things we see quite a bit is someone will send us a building that's been totally gutted, down to the studs and things like that. We view things like historic plaster as being pretty important, pretty fascinating historic material in itself. So we'd like to see it before you've taken everything down. That's not good. Obliterating the floor plans, I talked about that. And again, I put plaster in there because that's one of the most frequent things I see. So, so here's the big reveal. This was a home in upstate New York. They applied to us. Everything looked great in the application. And so there's the afterwards. This is what they chose to do with the building. And you can see, they've removed the character defining columns. The house has been obscured with vinyl. Vinyl's not a product we support because it's not a sustainable product. They've removed, kind of typical. I would say that we run very little denials. We don't do a lot of these. we're generally there to work through somebody through the process. So we have a very high success rate. Number one question I would say is how long does it take to get an approval? It's under 30 days for this program. It's all within New York State, all within our office. So 30 days from a part 1 application and part 2 that comes in together. You always hear back in 30 days, always by email with official correspondence, and the same thing for the part 3. That's my overview of the program. All of these things about the commercial tax credit program, which there's a lot of property owners here who are going to want to watch this, because the commercial program offers 2 credits. 20% from the federal government and 20% for New York State. This is really what Carrie was saying, big business, particularly in the 5 boroughs. So please tune in Thursday for that. I'm looking forward to questions. I do want to turn it over to Blair at this point to talk a little bit about some of the Conservancy's programs. We work quite a bit together.
Thanks, Dan. Just making sure my screen sharing is working. Okay, everybody see what I see? So I work for the New York Landmarks Conservancy. We are a private nonprofit organization. We're also different than the Landmarks Preservation Commission in New York City, which is a city agency. So they're the organization that issues permits and things like that. But we provide financial and technical assistance to owners of historic properties. We have a number of different programs. Our Sacred Sites program is really popular throughout the state. That's grants for religious properties. We do a lot of advocacy for new historic districts and changes to historic districts in the city. Right now, we're really advocating that the part of the economic recovery of New York in this time of the pandemic is going to be historic preservation because it creates so many jobs. We also have a number of grants available for nonprofit organizations. This is an example of a skylight that we helped restore in a museum downtown. This is an example of some windows that we replaced in a little lighthouse in New York Harbor called Robin's Reef. It's owned by a nonprofit museum. But the program I'd like to talk about mostly tonight is the New York City Historic Properties Fund. And this is a program that's primarily used by homeowners, but it can be used by any type of property. So this is a nonprofit revolving loan fund. We're like a small nonprofit bank. We provide loans for exterior restoration work. We've been around since 1982, and we have about $9 million in assets, and we've done over 260 loans. We're about to advance our 30 millionth dollar coming up very soon. So loans that we offer range from $50,000 to $400,000. So this is really for like medium-sized projects. The terms are usually for 10 years, and the interest rates are pretty competitive with most other lenders right now. Generally, interest rates are low right now. We've always tried to keep our interest rates low. The loans are secured by a mortgage on the property. And then we disperse the funds as needed. So when the contractor asks you for payment for a certain percentage of the work, then we issue a check. We're not just going to give you a lump sum of money and wish you luck with it. Our staff is actually very involved in the projects. We attend all of the progress meetings. We're making sure that the budget works out, all the work is done properly, that the right preservation professionals are working on the project. As Dan mentioned before, we are one of the organizations that can provide referrals to contractors and architects and specialty artisans that you might need for historic buildings. When our board approves a loan, the things that they're looking at are pretty similar to what most banks would be looking at when evaluating a loan application. What's your ability to repay? Do you have a good credit history? Is there enough equity in the building as collateral? But we're also really concerned with if this is a good thing for the building and if this is a thing that's going to benefit your neighborhood. Is this a good preservation project? just to give some examples of projects that we've done before, I also wanted to show some projects that took advantage of the state homeowner tax credit. We're big fans of the tax credit program. Whether you work with the Historic Properties Fund or not, I always encourage people to try to take advantage of it. There's no downside as far as I can see. This is a project in Brooklyn on Ocean Avenue. This is a $150,000 loan for the facade and that porch, and they got over $30,000 in tax credits for this family. We do a lot of co-op projects. This is a building in Jackson Heights, Queens. It was a $500,000 project. We provided the bulk of the funding with the loan, and then they were able to get over $100,000 in tax credits that were distributed amongst the different apartments in the building. This is a row house in Crown Heights. Again, this is a full facade and window restoration. This is a very typical type of project for us, and they received a $42,000 tax credit. If you have any questions about the Historic Properties Fund, our nonprofit grants programs, or contractor referrals, anything like that, please don't hesitate to reach out to us. We're working remotely, but we're constantly checking our phones and emails. Thank you.
Great, so I guess we'll jump into some Q&A. Dan, are you able to see the questions coming through on the Q&A?
Yeah, I can see them here.
So I saw a couple that were popping up, which is a common question I hear about, is the tax credit retroactive? If the work's already been done, can you get your tax credit?
Yeah, potentially. It depends on the level of documentation you have from what happened prior to you taking the rehab. We would not look back to a previous tax year. I would say there are ways we could talk about work that was done in 2019, depending on if you had something else you wanted to add to the scope of work. So it's on a case-by-case basis.
Great, thank you.
And I do see a question there about reinstating a missing cornice based on a historic photo. I don't think anything could make a preservationist happier to see a cornice or a missing feature be reinstated. So yes, of course, that would be eligible.
Dan, follow-up question. Do you have a rough idea how much cornices cost, as well as how much generally it costs to install them or reinstall them?
You know, Blair might have a better idea. I mean, the costs I've looked at range quite a bit. I mean, I've looked at multi-million-dollar projects that have on corner buildings. It depends on if they're going with a pressed metal material. There are substitute materials, such as fiberglass, that have been used. For a row house, I've seen them maybe $50,000 or so or more. Blair, what's your experience?
As you said, Dan, it's something that really varies. It depends on material and just linear footage, and also the extent of ornamentation that was on the original cornice. So often for cornice repair, we see costs anywhere between $3,000 and $12,000 for an existing cornice that needs work. It depends on how deteriorated it is. I would say for, say, a 20-foot wide building with a fairly ornamented cornice with brackets and things like that, I think, you know, to recreate that in something like wood, I would say $40,000 is probably a safe estimate in New York City. Dan gets to deal with things upstate where things are a lot cheaper than dealing with in the city. So it is something that very much varies project to project, though. I have to give that caveat.
Thank you.
Great. And Dan, another question I'm seeing is, how about an interior plumbing project still trying to qualify for a permit? Does that qualify for tax credit?
Yeah, I
think you cut out, Dan.
I can hear you now. I don't know where
Oh,
we
did you get my
lost.
question or you need me to repeat it?
No, could you repeat it? Thanks.
Sure, yeah, this question was, the person was wondering if an interior plumbing project would qualify for tax credit.
Yes, all mechanicals would qualify. Not exactly always what you think of with preservation, but very practical things are definitely covered.
And that's one thing that's I find really important about the program is it really, you know, not only does it cover the architectural stuff that's so important to preservationists, but, you know, the stuff we need to live from day to day, which is obviously really helpful. Another question, Dan, what form does the co-op shareholders tax credit take? Pass through on the co-op's tax bill with the real estate tax abatement credit program.
It's a good question. I saw that pop up and I don't have a good answer for you at all. It's one of those things where I remember that I'm not a tax professional and I am always encouraging people to bring that to their accountant.
Sounds like a great plan for that one. Thanks for that question. And is there one more under that, Dan? One more question? About a front door replacement. This person doesn't know what the original front door looked like. The hallway needs repainting or resurfacing, and is that in the scope of work which can be applied for the historic tax credit? And it's in a condo building.
Yeah, the hallway. Yeah, the hallway for sure. A lot of times, despite there being some really good archives in New York City to work with, you'll never really know what was what the original historic material looked like. So, you know, I don't want to use the word conjecture, but there's a lot of examples by figuring out how to kind of date the building, talking to artisans and stuff like that, of what would be appropriate for the building. If the feature is completely missing, we have approved a modern door, a glass door, because, you know, that, as we say, it doesn't give a false sense of history. With that, because the material is not extant, there would be some flexibility of what goes in there. What would not go in there would be something that was really just architecturally, period, totally inappropriate. So we'd rather see something very modern or something that is, you know, based on some historic facts. There's a question here about, are there any grant programs available for a mixed use commercial and residential building that's on the register? There are not a lot of grant programs through New York State and the federal government for a privately held building. Most of those are reserved for nonprofits. New York State runs a program called the Environmental Protection Fund, which offers grants to municipally held or nonprofit buildings. So that can definitely be a challenge. Everybody's looking for the money up front to do the work, and there just isn't a lot out there.
I think that's exactly right. We at the League
I just want to
a lot, and you know, as much as we wish we could, there isn't anything available to our knowledge.
just because this is a homeowner session, I do want to give a plug to one of our colleague organizations grants program, the New York City Landmarks Preservation Commission, which is the city agency that I mentioned before. They do have a grant program for homeowners, and it can be a property where you rent out a portion of your home. There are some pretty strict income requirements. It's actually a federally funded program, so you do need to meet certain requirements with that respect, but I always encourage people to look into it because it's such a lovely program. Their grants go up to about $30,000, and it's usually for facade work. And you can find that information at nyc.gov/landmarks. I'll put that in the chat.
Yeah, I think that's one thing that's really important too, is to not get too discouraged if, you know, you can't necessarily find what you're looking for funding wise, because you never know when new opportunities might pop up. So it's always good to stay connected in your region and try to see if you can and stay on top of that opportunity for that stuff.
Christina, there's a question here about windows and windows always being complicated, which I agree. And they're talking about their co-op or their condo, individual owners replacing their windows and them not being always historically compatible. That's why it always surprises me when a co-op or a condo doesn't have rules in their bylaws about that, because they certainly do get very mishmash over time. Which I've seen in places like Sunset Park, in the non-landmark preservation component. You know, you see this in people doing one thing they want, one person wants, you know, awning windows or casement windows, and other people are doing double hungs. What we would do in that scenario is we would defer back and we would ask that you have the permission of the association for the window that you're requesting, and then we're gonna evaluate that window for appropriateness with our building conservators. Do we have any other questions?
Like we got one more question coming in about mixed use. I'm not sure I understand the question in the chat. Dan, do you understand that question?
I do a bit. Julian Adams may touch on using on the 17th. He may talk about how you can mix the homeowner and the commercial together. There have been people who have been able to use, they live in the building, they also rent portions of the building, maybe they have it under an LLC. We have had people who have been able to fully maximize using a 20% homeowner and that 40% in commercial credits. That's a bit of a dance, but it's completely possible.
I'm actually doing a project like that right now. I can give an example. It's a brownstone where there's a duplex apartment that's rented and there's a duplex that the owner lives in. So 50% of the eligible project costs will go through the homeowner tax credit, and then 50% of the costs will go through the federal tax credit and the state commercial credit. As Dan said, it's a bunch of paperwork, but it's a really great tax credit. Definitely worth it.
Great. So here's another question that came in. Would demolition and rebuild of a rooftop elevator machinery room qualify for the historic tax credit?
So if you're taking down the existing and rebuilding it from there, even if it was non-historic, that would qualify because that's a really essential mechanical component to the function of the building. Oddly, it says that anything non-historic or you were adding those components to the roof would not. But there's a lot of flexibility in there. I think the biggest thing I would ask is the visibility. And if people can see that from the public right out the mechanics of something like an elevator or HVAC, from how it serves the whole building. So I don't think we would go there. But yes, it would be approved.
Any other last minute questions?
I wanted to point out the Bowery Alliance of Neighbors created a tax credit info brochure a few months ago, and we would love to send you one. All you have to do, you can just go to our website, boweryalliance.org, and request one, and we'll send it out to you. And also, it includes all the information, contact information for the New York State Historic Preservation Office.
Great. Thanks so much, David. Again, thank you for inviting all of us speakers here tonight. It was great to be able to answer a couple of questions for people and really give them a great overview of the program. Thank you so much, Dan and Blair, for your input. And we'll go ahead and close it out here. So thank everyone for joining us.